Please note the disclaimers. This is not a solicitation to buy or sell any security ever. It's not advice. The results here are provided for general information purposes, and the materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Today is November 1st, 2022, one day before the Federal Open Market Committee makes a decision about interest rates, so we will look for two opportunities. One, for industries with strength that have done well during this inflationary period in case the market receives the information from the Fed as hawkish. And then we'll look at growth stocks in case the market conceives of what the Federal Open Market Committee says to be dovish. But let's start with strength. For those of you that follow this Substack or follow this YouTube channel, you know that there is great strength in the regional banks, and we won't review how we found that, but we will create a screen to look for strength within that industry. Let's open up stock screens, create a new screen. We'll look for companies that have at least $100 million in revenue, positive free cash flow. We're going to go to the strength industry. So under industry, we'll type in regional banks and select those. We're down to 199 companies. Now we can go to some proprietary ratings. We want to make sure that the fundamentals are strong, so we'll use our EPS rating, which goes from 0 to 100. We'll go to the 75th percentile or better. And we also want to see some buying strength, so we'll use our buying selling strength rating as well and make sure that's in the 75th percentile. Finally, we'll look to stock price. I'm looking for companies that have $10 or higher stock price. And finally, I want to find companies that aren't too close to their 52-week high, so there's still room. So I'll say it's a maximum of 90% of the 52-week high. That leaves us with 10 companies. I'll close the editor. Here are the results. I'll just use the largest company in the list, BAP. Close out of the screener. And we'll follow the process that I shared in the prior webinar, which is linked in this Substack or in the comments section of this video. First of all, we start with the 10-year. We have our congestion lines drawn in as well as our support and resistance. We'll throw in the 50-week moving average. A quick analysis of this is RSI is under control. There's room to resistance, and we have some clearly defined parameters for profit and loss zones. Let's go ahead and draw those in. Always start with the loss zone. It's a good mental exercise. We'll put the loss zone right at that 50-week moving average. So the loss zone is encapsulated here. We'll go ahead and put in the profit zone. We'll go up to trend resistance. And finally, since we're going to be using that 50-week moving average as an anchor, let's go ahead and draw in a horizontal line as we move across time frames, right at that point. That would be right there. So as always, we go long-term, medium-term, and short-term to determine if something looks like a reasonable trading apparatus. With the intelligent tool drawing built into Pattern Finder, so we've got the congestion lines built in, trending support and resistance. We also have the intelligent drawing tools, so they will maintain their position as we move into shorter time frames. Let's go to the 3-year daily. We can see our profit zone and our loss zone. We can actually see there is some room even higher to trend resistance on the 3-year chart. But I like this profit and loss zone, and here is our loss number right there. Finally, since we've done long-term and medium-term, let's go to short-term. We'll go to the 18-month. We can see our profit zone, our loss zone. There's nothing here that makes the chart not look good, so there's no red flag for a not trade. And so we'll lean on a company like BAP in case there's good news from the FOMC, and by good news, that would mean the market sees the Fed being more hawkish, and therefore more of what has been working in this bear market will continue to work. Next, we'll do the same thing for growth technology, but this time with the anticipation that perhaps what the FOMC says will be conceived as dovish, in which case there could be a pivot for a day or two toward growth companies. We're running a similar screen. This time we're looking in technology services rather than regional banks, and we have reduced the buy-sell rating to 60 to 100 rather than 75 to 100 that we did with the banks, because technology companies just don't have a lot of buying strength right now. We can see the results here. This time we can sort it by the stock return over the last year. Let's choose the company that's done the best over the last year. Checkpoint. And let's go back to the chart. Here we go. We have all of the congestion points drawn in by Pattern Finder. We have trend support and trend resistance drawn in. This company looks like it has broken through support rather strongly. If we go to the news, it's apparent that this huge candle is from an earnings beat, which is great news. There's no red flag on this long-term chart, so we'll draw in our loss zones and profit zones as we did before. And now we'll move forward with our process. This is the long-term chart. Let's look at the medium-term chart. A 3-year daily. This looks pretty good. We see the loss zone is down in this area, which would be at trend support. And the profit zone is a little smaller here on the 3-year, which means the exit point would be a little bit lower. And finally, we can look at the 18-month, and here's how the chart looks. We'll note that trend resistance actually hits 7 different points. So this 130 area has been very difficult for checkpoint to get above. So if there's a dovish Fed, or the market perceives it as dovish, and checkpoint gets a rally, we'd want to see it on heavy volume above that 130 area for this to be a go. Obviously, a more rigorous approach to this would be to take all of the results from Pattern Finder, save them in a watch list, and go one by one to find the ones with the greatest strength. And now we're prepared for an FOMC result where the market believes it was hawkish or the market believes it was dovish.